Hey there, fellow traders. Welcome to the premiere episode of our brand new series called Spy Trade Recaps. I'm your host, Body, and I'm excited to bring you the latest insights and price action analysis of the S&P 500. In this series, we'll be diving into real life trade recaps, sourced directly from our exclusive Discord community. Our Spy Scalp Alerts channel is a treasure that is honestly incredible in terms of accuracy and in terms of strategy when it comes to trading SPY with very defined risks. Now, despite me saying very defined risks, we did have a losing trade here for negative $30, which we are going to discuss. But yeah, in this particular series, we're gonna go over all of our SPY trade recaps. We're gonna go over the trades that we took within our Discord. We're gonna talk about several factors, the strategies that goes into this trade, so that you guys can get educated. And it's just going to be incredible. Now, the best part about this strategy is throughout the trade, our members are engaged in constructive discussions, sharing their observations and support for each other, as you can see from this screenshot here. This is what I so much love about my team. It's the will and the engagement to want to be supportive of each other when the market is going against you. This is really, really what builds up a very strong team. So I thank you guys, and I want to bring that to your awareness that I am aware of it. And, I really, really respect you guys for this. All right, team. Let's get to work. So, the first trade we took was at 9:48 a.m. on SPY. Now, keep in mind we did take several trades that we're going to talk about at the end of this video on other stock options, but for SPY in particular, our first trade on SPY was at 9:48 a.m. We bought one SPY put, 0 DTE, 416 put at 1.85, and on this contract I left a note saying do not chase the premium, wait to get the fill at the exact limit alerted. And the reason why I said that is because I wanted our team to get the exact alert, the exact premium as shown in the alert, so that we can easily manage the position. And the reason why I said that is because I wanted to add another contract if we were going to be wrong. Now, when I did add the second contract, the plan was going to be if we get stopped out right away, we take the L, and if not, we enjoy the high probability trade setup. So this trade was at 9:48 a.m. It was right here at 9:48 a.m. So yeah, right on this reversal here at 9:48 a.m. And then price action still ended up going against us. So right here at 9:54 a.m., we ended up adding another contract. Actually at 10:02 a.m. So 10:02 was right here. This is when we added another contract, and we said, do not add anymore. The strategy is if we get stopped out right here, we're just instantly gonna exit the trade at a loss where we take our L, and we're gonna get back in the trade later on. So now we did make a mistake today, and we didn't take the L, and I'm going to show you guys why we should take the L every time. Now keep in mind this trade came back to the break even because price action did come back down later. Now although it did come back down to break even, I'm not very happy about this trade because this should have been cut right away as soon as we got above there. So this should have been a very small loss. Now let's go into our second trade there. Our second trade was SPY 0 DTE 417 put at 213. Now this strategy, I love this strategy, you guys. This strategy is known as a deep ITM strike strategy. ITM means in the money. So as an options trader, right? Something that will change your whole concept for the best on options trading. Learn to trade the strikes instead of the premium costs only. Here's what I mean by that. instead of trading the actual premium, like instead of right here saying, oh, you know what, SPY is at 415 and I'm gonna buy a call that's, that's at the money and so forth at 415, blah blah blah. I wouldn't just do that, a call that's at the money, because when you get the pullback, you're going to get very, very small premium. There are varying strategies for all of these particular trades, but overall, understanding the concept of the strikes relative to the in and out of the money strikes is very, very crucial to your options trading strategies. And here's why. If you're gonna be at 415, right, and you're gonna buy a put, if you buy a 413 put, that will go in the money when it comes back down all the way here, the move that you get, the sell off that you get, is going to be very, very small, and the premiums are not going to move. But if you get a strike that's 417 put, right, that's deep in the money, and premiums is at 415.86, which means your contract is $1.50 in the money, then you're going to get significant premium increases because your contracts are delta positive and are in the money, and everything within the options Greeks is favoring you in a positive way. So this is the comparison. If you were to play something that's out of the money or at the money, your reversal move at that entry is going to be much slower, opposed to if you played something that's deep in the money, where you're going to get significant premium increase on very, very little sell-off. So that's the beauty of this trade. Now, the beauty is we time the trades really, really well. We take it very serious, and we promote and encourage risk management above all in this strategy. So here's what I mean. Making profits is not the key here, all right? Making profits is going to come. The key factor within this strategy, and also with many of our other strategies in our Discord, is to manage risk at all times. Because when you manage risk, profits are going to come. When you learn to manage risk, which is the most important aspect of your trading business, profits are going to come. There are so many ways that you can profit from the market, but this only comes after you have learned to manage risk. So let's talk about the trades that we took. So the first trade was right here at 948. And that one was a 416 put. So at the time, price action was trading at 414. It was trading at 414.20 area when I got that 416 0 DTE put deep in the money. So it was $2 in the money. Now, when the contract did get another spike right here, right, I usually would see that as an opportunity for me to average down. And what I would do is, as soon as you get the massive squeeze, right, I would average down another contract. And from there, I would have a very, very, very tight stop loss. So let's take a look at how this trade went. Once we got that massive move there, I didn't average down, but when we came back down here, I was break even. However, the market held, and then we had another massive move up. Now, when we had that massive move up, right on this 2-minute candle, I entered another put position for this 416 put. Now, let's go take a look at the SPY scalp alerts here. So we bought another put there at 10:02 a.m. 10:02 a.m. is right here. Right here on this candle. And here's what we said for that entry. We said now we are holding two contracts at 1.59 average cost, since we added this contract at 148, and we said do not add any more. The strategy is, if we get stopped out now, we take our L, and if not, we enjoy this high probability trade setup. So what happened in the following candle? We basically had a follow through candle, taking out the wick, and right here we should have been out of that trade and taken that loss there. Now, we didn't take the loss there, and even though we came back down and we broke even on this particular trade later on in the session, I was not happy about this trade because we did not take a loss there. Now, let's go take a look at our second trades and our third and fourth and fifth trades. So for the second trade, we entered an even deeper in the money put. Now keep in mind that we didn't go with the same strike. This is very important that you do that. If price action goes up throughout the day, you do not enter with the same contract. You go even another strike deeper. The reason why you go in another strike deeper on a 0 DTE contract is so that you're like, even if they do unexpectedly push the market up or spy up a whole dollar, my options are still going to hold value for the consolidation to give me a chance for a potential sell-off back down so that I can get out of the trade without being affected by theta at all, since I am still delta positive due to the contract being bought when it was very deep in the money. So this is the strategy behind this trade. Now, here's what happened. We entered this trade at 10:10 a.m., right? Bought one SPY 0 DTE 417 put at 213. So at 10:10 a.m., 10:10 a.m. This is 10:10 a.m. Once we had that shooting star reversal, and the reason we entered this trade setup was because of the RSI price action being at 87% and rejecting 87% RSI overbought 3 times. Once you see this behavior, this is a very clear indication that there is going to be a sell-off even on a very, very strong day like today. So that trade was purchased at 213 premium of the 417 put, and it was purchased at when SPY was trading at 415. So that contract was $2 in the money. The trade strategy is it always has to be $2 in the money, and as soon as it goes less than 1.50, like $1.50 below the strike or away from your strike, whether it's a call or a put, then exit the trade right away, because you don't even want to risk premiums going there. Instead, you just want to observe price action from there, and if anything, re-enter as soon as price action gets back to that level where you exited your trade. Now, if it does go up higher, like it did here, what do we do? I'm going to show you what we're going to do and how we can also capitalize on that move, even if we are trading the wrong side of the market, because we don't want to be committed to this, let's say, quotation fake pump or whatever you believe that day is. So in this particular trade, we entered the trade here at 415, and we got out right over here at so we entered at 213 premium, and we got out at 250. Now, keep in mind, team, just this very, very, very small move right here, this very small pullback move, which was only about, let's see, which was only about 35 cents drop, it gave us $35 profit there. That was that much of a good trade right there. So if we were doing, let's say if we were doing 5 contracts or 10 contracts, which is the way this strategy is meant to be traded, with the way we have the very tight defined stops, then you would have even a better probability to trade these these setups. And you don't always have to fight the market. Matter of fact, you should never fight the market. This strategy should be traded on days where the market is clearly very, very weak and placing a top. Let's say like you get a lower high structure and so forth. This is the time where you want to buy these strategies, because once you get a lower low drop, it happens so quick where you're gonna secure 100% really, really fast, while you have all of the benefits of that contract being deep in the money and protecting you. So our second trade gave us $35 profit, and one contract, team, keep in mind. And this trade was 6 minutes. So 10:10 got out at 10:16. And then we got in another trade at 10:44 a.m. and this one was also a 417 put. But keep in mind, team, we sold it at 2.50, right? And what did we buy it back at? We bought it back at 1.65. And keep in mind, team, this isn't some paper trade stuff. This is literally our team trading it with us, as you can see here. Our team is taking these trades with us. So here's another trade here, team. We entered at 1.65 here. One contract again, deep ITM strike strategy, which we talked about. The stop loss is going to be 1.30, please. And what happened? we sold the contract. Now let's take a look at where our entry was. So this contract was, this entry was at 10:44 a.m. So 10:44 a.m. is right here. This is 10:44 a.m. As soon as we filled that gap right there, we had contact with that massive gap that was left over right here at 415.60. That's when I got our traders back into that high probability trade, deep ITM strike for another topping process, distribution process, and a counter trend or a full-on correction back down. And this trade right here went from, so we entered at 1.65 and we got out at 2.0 for $40 profit. So we got out of this trade at 11:09. We entered at 10:44 a.m. So 10:44 a.m. We entered 10:44. So we entered on this candle, right? On this candle here at the reversal. And where did we sell? We sold at, let's take a look. So that was a nice double top there too that our member Chump Chops called out. So you can see we got out at 11:09 a.m. So 11:09 a.m. was right on this candle here, like right here. As soon as we went down there, this is. Let's go take a look. So 11:09 a.m. Let's go to that candle. 11:09 a.m. 11:09 a.m. This is 11:09 a.m. So on this candle flush right here, this is where we got out at 2.0. So this was a really good trade, a $40 profit trade. And keep in mind, this is just one contract. If you were doing 5 to 10 contracts, this would add up really, really fast. So and then we did another trade here. Now many traders played this one, and this was beautiful. Now, what we did after that is we took our loss on the 416 put for $30 loss, which is the one that I told you guys that I didn't take a loss on and that I wasn't very happy about because I kept it longer. But yeah, the whole point of this strategy is for this whole reason, so that you come out green no matter what, even after the trade has gone absolutely against you. And the reason why is because you take extra precautions with the deep ITM strategy. Now here's another one. Right here, after the whole flush operation, I believe, when was it? So after the flush operation, this is when we switched sides to the put side. So you can see even after we got out of our puts, we could have continued to short it here with another bearish engulfing, with another lower low structure down to 414. Imagine holding the 417 puts you got right here down to the 414. You would have absolutely banked, team. And here's what I mean. The trade went from 1.65, which is, this is when we entered, where was it? And it went all the way up to 2.50, which is absolutely insane. That's a lot of gains there. But yeah, team, at right here, so right here into power hour at 12:02 p.m. 12:02 p.m., which is right here on this bullish engulfing candle, we ended up changing sides to the bullish side, and we got a 414 call. So we got a 414 call that was in the money. This wasn't the ITM strategy. It just was a quick in and out trade. And what we did was we entered on this bullish engulfing reversal, and we got out right over here at 2.11. So that trade made us $30. That was another just one contract $30 profit, really fast. And then we did another trade again at 12:30 p.m., 30 minutes before the market closed. So this trade was a 414 call at 12:30, exactly at 12:31 a.m. So 12:31 a.m. 12:31 a.m. So on this candle right here at 12:31 a.m., this is when we entered another trade. And the reason why we entered this trade was we saw a nice bullish engulfing candle here at 12:31, and we got in at the halfway retracement of that candle pullback after the premiums lost significant value. And the reason why we entered was that we were expecting a move back up, and we had a really nice move back up where we sold a contract at 2.10 for another $30 profits, but the contract actually went a lot higher than that. So just amazing, amazing trades. And then just as we got into the closing session, I also did take another trade, but this one was different. So this trade was called out at a different time at 12:22 p.m. So 22 minutes into market power hour. So 12:22. 12:22. So right here at 12:22, once we rejected that trend line right there, I entered this trade here on this candle reversal. And yeah, so this one was a very interesting play too. This time, our trader mentioned them not being able to trade zero DTEs because their brokerages sells their contracts 30 minutes before the close. So what I did was I was like, you know what? This time I'm going to do the next day expiration, but I'm going to do a very deep in the money same strategy where, and here's how it worked out. We entered a 418 put at 2.90, right? Our stop loss was 2.70, set limit stop loss at 2.70. So at 12:15 p.m. to 12:22, which was a 7-minute trade, we went from 290 on a tomorrow expiration deep ITM strategy to 330, making a nice $40 profit there. This should say 40, not 30, but yeah, that was a really nice $40 profit there, and just an incredible safe, safety thought ahead of time trade setups for our members. Just an amazing day in terms of scalps. And the reason why we were so confident about some of these trades that we took is because obviously the leader Apple had a beautiful reversal and just had an incredible day, and just continued to push the market higher. So this gave us confidence at the recent breakout that the market was going to continue to push higher, and that's exactly what happened. So let's take a look at this particular box here, supply and demand zone. So we did play Apple as well. We played 2 Apple day trades at the very, very bottom today. Here are the trades. So the first contract, I alerted 3 Apple, I said bought 3 Apple May 19, 170 calls at 1.62. So I rarely ever buy 3 contracts, and you guys can see why there are heart reactions, because I am very precise about how many contracts, exactly the details, and I think our members like that I was confident on this trade. And let's take a look at the entry. So 8:28 a.m. I entered that trade at 8:28 a.m. and I believe it was just around here when price action was doing a consolidation base zone after that beautiful reversal. We had a rally, a nice base consolidation there, and then a massive rally. So what happened there? I entered right here at 8:32. So actually it was right here at the consolidation of the imbalance after that nice reversal. So I entered at 8:32 there, and then I sold it right here at 8:44, and with 3 contracts I made $90 on this trade. So yeah, so you can see we entered at 8:28 a.m. and we sold at 8:46 a.m. for $90 profit. So 8:28 is this contract right here. We entered right here at 170.70 and we sold it at 8:48 right here at the very peak of the retest, at the resistance or supply zone. And then here's what happened. Once we took profits there, right team, what did we do? Once price action went back down, so we retested the top of the base right here, and once price action went back down and we placed this massive bullish engulfing reversal there, signifying a higher low structure, I entered us on this trade right here above this breakout here, and I got us back in on 3 Apple contracts again at 9:12 a.m. at 1.74. So at 9:12 a.m., let's go take a look at exactly when we got that. So you can see at 9:10 a.m. we had that massive bullish engulfing, and at 9:12 a.m. I got us on a really nice fake out dip reversal red candle with a tight stop loss right here. So I got us into that trade right here in the halfway retracement, and we basically basically enjoyed this massive move up. As you can see from the consolidation zone, supply and demand zone breakout that we teach in our course, and we teach our members in our Discord live session every single day. Now, you can see from the screenshot, our members did significantly well on these trades. And yeah, team, I really put in time for this video. I wanted to make it good for you guys, give you guys my perspective on the entries. And going into the future, I'm really going to be more vocal about these strategies. And yeah, again, Apple was a an at the money call where we would go in the money as soon as we break the top of the zone, and that's exactly what happened. Once we broke the top of the consolidation zone, we had a little bit of consolidation there, and then we had a massive imbalance move to the upside, towards the upper side of the channel. And I basically told my members, if we can hold the bottom of this base zone here, then we're going to retest the top of the channel there. And this just was amazing. To see it come back to life is just amazing. I hope you all enjoyed this video. If you guys enjoyed this video, please give it a thumbs up for our new series. If you'd like to see more of this, subscribe to our channel, and looking forward to sharing more of these awesome strategies with you guys. Have a wonderful rest of the day, everyone, and stay awesome and stay green.